Ladies and gentlemen, good day and welcome to the Expleo Solutions Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta. Thank you, and over to you.
Thank you, Mike. Good afternoon to all participants in the call. Welcome to the Q3 FY23 earnings call of Expleo Solutions. The results, press release and investor presentation have been already mailed to you, and they are also available on the company's website. In case anyone does not have the copy of press release and presentation, please do write to us and we will be happy to send you on the mail. Presenting the management today, we have Mr. Ralph Gallison, Chairman and Non-Executive Director, Mr. Balaji Vishwanathan, Managing Director and CEO, Mr. Desikan Narayanan, Chief Financial Officer. Mr. Balaji will start the call with a brief overview of the quarter gone by, which will be then followed by Mr. Desikan, who will be getting into detailed financials, and after that, we will open the floor for Q&A session. As usual, I would like to remind you that anything that is mentioned in this call which gives any outlook for the future or which can be construed as forward-looking statements must be viewed in conjunction with the risks and uncertainties that we face. These risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with the SEBI and subsequent annual report, which you can find it on our website. Having said that, I will now hand over the call to Mr. Balaji. Over to you, Balaji.
Sure. Thanks, Asha, and thanks once again for everybody who has joined the call and the interest shown in Expleo Solutions. We've had a reasonably good quarter. Year on year, we had a 27-28% growth. Quarter on quarter, even though it's marginal, given the kind of macroeconomic conditions, I think we still had a reasonably good quarter. Our investments on what we wanted to do in the digital transformation space is still showing good traction. We have added new customers. We have also added new engagements, different type of engagements. And the contribution from US is actually tracking well, which is what one of our challenges was in the past. And apart from that, we have also done some tweaking in terms of how we wanted to manage our costs. We have been able to reduce some of our subcontractors and contractual employees, even kind of volatility in the demand. And that's actually helped us in improving our margin profile as well. So overall, a good quarter, and we still have, we are very positive in terms of, where the market is headed and what kind of demands are coming in. But given the macroeconomic conditions and the kind of uncertainties that are there, so we are being very cautious in terms of where we want to invest and how much we want to invest and how much we want to leverage. So that's what we see.
Sorry to interrupt, sir. Your voice is slightly breaking. If you could repeat the last sentence once again.
Yeah. So what I was saying is that we will continue to be hawkish in terms of how we manage our costs for the next couple of quarters and be cautious on where we wanted to invest. And we are focusing on the margin profiles. And all the focus for this quarter, that is in the Q1, calendar Q1 of 2023 or the Q4 of this financial year, is going to be on the merger, which we are in the final legs. Hopefully should happen in the next 2 to 4 weeks kind of a time frame is what we are expecting this to get closed. And all our focus is on making sure that that gets completed, as per the schedule, even though it got later. So that's briefly what the overview is. So I'll hand it over to Desikan to cover the numbers in greater detail.
Thanks, Balaji. Good afternoon to all. We'll take you through the quarter-on-quarter and also 9 months performance. Quarter-on-quarter revenue for the quarter improved by 3%, ending at 135 crores against 131 crores previous quarter. EBITDA percentage was around 23% and PAT increased by 610 basis points compared to previous quarter, ending at 20%. Major contributor to increase Forex gain. We had a 9.5 crores Forex gain compared to last quarter. We had a 1.9 crore loss, Forex loss. Majorly it is unrealized loss because of the revaluation of the assets is the one majorly there. Of course, this is because of rupee weakening against euro and pound and US dollar, which are all the major currencies which we deal with. We had an improvement in DSO. DSO dropped to 74 days compared to 80 days in the previous quarter. And our cash balance have increased from 108 crores to 159 crores. Now, looking at the 9-month comparison against the previous quarter, the growth was around 35% in revenue. EBITDA grew by 66%. Major contributors increase in revenue, and also we were doing a lot of cost management activities where we try to not to reduce much cost. We are conscious about the cost, which has led to this increase, and also our earnings per share improved by 52%, end with 52.8 amount. On the update on merger proceedings, we expect this. Actually, it's the last quarter when we were talking about it, we expected this to end up by December. But due to the reconstitution of NCLT benches and the court petitions, the matter finally came for hearing in January for all the 3 states. So the jurisdiction NCLTs at all 3 places, in Bangalore, Chennai and Mumbai, have heard the matter, and they have reserved the matter for orders. So what it means is that they have had all their hearings, and we don't expect to have another hearing. We are following up with the NCLT registry for pronouncement of the order so that we can obtain the certificate, which we expected to complete in the coming weeks. So overall, the current expectation, hopefully there is no backlog from the NCLT side. This will end before around March with the current expectation. So this is the update on NCLT, and we can open up for question and answer.
Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Pooja Ahuja from Monarch Network Capital. Please go ahead.
Hi sir, congrats for the quarter and thanks for the opportunity. Firstly, if you could specify the revenue, PAT and EBITDA of the unlisted companies.
Okay, I'll see the PBT. Revenue for the 9 months ending for other 2 companies is around 273 crores. And the PBT is around 41 crores. That is the unaudited 41 PBT, profit before tax.
Sure. And could you specify the EBITDA number?
EBITDA is around 47 crores.
Right. So secondly, wanted to understand, the digital revenue as a percentage to the overall revenue has been coming down. Just wanted to have some sense on that. If you could just elaborate on that. What's the trend? What's the deal pipeline that we're seeing here?
No, actually, digital revenue, the total revenue has come down only in this particular quarter, Pooja, because, if I were to compare it with last year, the absolute numbers have been growing. Just a percentage as shown, I wouldn't say it's going down. It's as a percentage because the denominator is higher. It's looking like the percentage is lesser, but we are still, looking to have close to around 38% of our revenue in digital for the full financial year. And we are well on track. Last quarter, we had some customers who had ramped down and also a lower number of working days for some of the geographies, because of which It looked like actually it's gone down a little, but it's not a significant drop from 45 crores. It went to 44 crores. And we don't see that slowing down in any way. Just some seasonal ramp downs, which normally happens in the Q4 of the calendar year. That's the reason why we saw some impact.
Sure, understood. And on the attrition side, what was the attrition percentage this quarter? And do you think that's kind of normalized now? Or what are you seeing any supply side challenges?
We do see, I wouldn't say it is normalized because let us still see, for us to say it's normalized, we need to see at least 3 to 4 months of continuous trend of decline. Of course, the last couple of months has been on the downward trend, but still much higher compared to what we would like to see it at. We're still in the range of around 28% on the volume attrition. And our expectation is that we need to get it down to 20-odd%, but we are still keeping a close watch on that. We still see challenges in attracting or getting the highly technical talent. So which is why we are investing on the learning and development phase and the upskilling piece for our talent. So to answer your question short, attrition is showing a slightly lower trend, but it's too early to call whether that particular issue has been sorted or not.
Okay. Understood. I will join back the question queue. Thanks.
Thank you. Participants are requested to kindly restrict your questions to 2 per participant. Participants are requested to kindly restrict your questions to 2 per participant. We have the next question on the line of Deval Shah from RBSA Investment Managers. Please go ahead.
Hello, am I audible?
Yes, it's a little low. If you come closer to the microphone.
Yeah, I think this is better. So my question is with regards to the loans and advances to the related parties. So what is the outstanding as on the quarter ending 31st December?
As of 31st December, we had a loan of almost INR side, it is around 63 crores.
63 crores.
Yeah.
Okay. So follow-on question on that only, sir. So I just wanted to understand your thought process, because I understand our OPEX and CAPEX mainly are in INR, and if we don't have any midterm or near-term plan for overseas acquisition, so wouldn't it be more sensible to have treasury in India and earn the higher yield and be not exposed to forex risk and have a lower yield while having that treasury outside of India?
See, the way I look at it is on the cash management is that currently, if I look at my subsidiary companies, I have some cash which is sitting in the bank, which is not earning much. So that if I park it in the group cash pool, they have a cash pool and they give a interest rate of overnight interest rate plus 3.6%. So I feel that keeping it in my bank, I can park it there, and for me, it's like instead of keeping it there, I can keep it there, and also I get back within 3 days. So that's a very short kind of a thing which I can get it from them. So I feel that is more prudent way of getting, and also the risk factor is comparatively lesser for me to get it. That is the whole point that we are making this kind of arrangement where the group cash pool is being used for us. So it gives a good interest rate for us. And over the period, if you look at last quarter to this quarter, we have seen the interest is increasing. And for the term deposit, we are trying to use the maximum cash what we have in India into the term deposit, so that also gains the higher interest rate which we currently have. So that way we are utilizing both sides, both from the overseas subsidiary cash, surplus cash, and also the India surplus cash. That's the way we have adopted this scheme.
My limited submission was on this, was that how we are managing our cash and treasury in a way with OPEX line, CAPEX, yield, and looking at the near-term or whatever acquisition we have in the pipeline. So we are managing, keeping all these variables intact, right?
Yeah, absolutely.
Okay.
The way we are looking at it, anytime if we need to generate cash for our acquisition, we are there. So we can generate whatever the balance we have, we can take it, and also we can get the loan back and use it for that purpose.
And the average yield would be on the that treasury lying outside of India would be?
That's overnight plus the overnight rate plus they have a 3.75%, and overnight goes up and down. Actually, it is going up, so that way we are earning a better interest rate on that.
It's in the range of 5% plus, and what Jessica mentioned, instead of if you get the money into India, then taking it out is not going to be easy. You need a significant amount of approvals, and all our future investments, whether it is in terms of acquisition and whatever we want to do, it's better to try and keep it as much as possible, except for our normal working capital requirements in the subsidiaries.
Okay. And my second question is more on the global outlook. So probably since we already have a presence in our parent is in Europe, so just wanted to get sense on overall outlook on the demand side, specifically in the sentiments.
So if you ask me whether the demand has tapered down, I wouldn't say that it has tapered down. But there is certainly a slowdown in terms of the process. The digital transformation programs are going on, but the larger investments are being reviewed, more minutely rather than people going on the investment sprees or changing over the older platforms into new and other stuff. So it's not something which is in the same pace as what it used to be earlier. But that doesn't mean that those projects are stopped or people are not. But we need to be a little more cautious in terms of how this is going to go. It depends on whether it's US or Europe, what kind of recession, and if it is really going to go into a recession, or if it goes into a recession, what level of impact it's going to have. So that's the reason why we are also cautious and customers are also cautious in making the investments. Ralph, do you want to add anything more?
Okay.
Yeah, thank you, Balaji. So he added few.
Sorry.
Should I add a statement?
Yeah. Please go ahead.
So, probably even from a global perspective, I think we certainly see across all the industries strong demand when it comes to digitization initiatives, digital transformation initiatives, what would even require highly technical skills and domain skills from our side. Customers are a little bit cautious even to make big commitments, but trying even to even bring it into a sequence of even different steps so that they even keep their investment level under control. There is even good demand even in some of the more engineering practices and capabilities around manufacturing, like mechanical engineering. But these are areas where the customers are even see that they're really trying to combine all the efforts that they are taking, and this is even then always very competitive of price, and this is even where we even then, especially in our existing customer base, are really choosing even carefully our own initiatives where we can contribute significantly to the customer success. But as it is very price competitive, we are very selective in this area.
Thank you. We have the next question from the line of Ravi Naredi from Naredi Investments. Please go ahead.
To give me this opportunity. My question is, in this top line, can you describe which top line has increases our margin, either from existing customer or new customers?
Sorry, I didn't understand. So what you're asking is that whether it's the new contracts which is actually improving our margin, or is it
whatever our top line has increases, it comes from new customer or old customers?
It's a combination of both. It's a combination of both always. And always the new or the fresh logo revenues for a full year, because obviously we don't track the fresh logo revenues on a quarter-on-quarter basis because none of the contracts really start big, when you're starting off. So we only look at what is the new customer revenue during the full year per se. And normally our new customer revenue is in the range of around 10 to 12%, and our existing customers' revenues in the range of 85 to 88%. So that has been the last year or so. Earlier it used to be much lesser. The new customer revenue used to be much lesser, but we have been trending at that 10 to 12% of new customer revenue over the last couple of years at least.
Secondly, this net profit, higher net profit margin, it will be maintainable in quarter 4?
So we have, as mentioned, what we have done is we have rationalized our costs. We have reduced the number of contractors, particularly some of the niche skills and others, because we didn't want to keep too much of bench awaiting opportunities. So we will probably have to keep a close watch on that. So if there is any big demand, then obviously we'll have to make that investment. But as of now, it looks like we will continue to be in that the range which we had mentioned earlier. Closer to till the merger, it will be closer to the 19-20% range, and post the merger, it will be closer to the 16 to 18% range.
Okay. And what about new hiring in quarter 4, sorry?
Calendar year quarter 4, that is, we are talking about
calendar year quarter 4 has gone. I am asking for financial year 23. What is the planning for March up to March 23?
So net of attrition, we have been hiring close to around 180 to 200 people on a month-on-month basis over the last 12 months, and that's going to continue. And net of attrition, the addition will be in the range of around 40 to 50 people.
40 to 50 people. And any utilization of the funds lying with us, organic or inorganic? Because usually I am the shareholder since long. Expleo Solution never hold money with them. They always distribute as a dividend or whatever they are in mind. But this year, few years, they are not doing so. So what is in mind of management? That I would like to know.
I think this is a question which we have heard, consistently. The way we are looking at it is that what is the best way to utilize the cash? What we were looking at was some kind of an investment that we could do to enhance our capability, which will actually add value to the company and to the shareholders as well. And if we are not able to make any of those before end of this financial year, then we will look at redistributing it, at least distributing part of it as part of dividend as well. So it's not that the dividend is shut down, but we want to wait and see if there is any opportunity for us to better utilize the cash. If we're not able to do it, then in the next session, which is the end of financial year, so we will take a call on how the cash could be distributed or utilized.
Thank you. Participants are requested to kindly restrict your questions to 2 per participant. We have the next question from the line of Aman Shah from Cheetah Investments. Please go ahead.
Hello. Yeah, thank you for taking my question. Sir, a question on our revenue for the unlisted entity is 273 crores. Can you give us details of the DSOs there in the unlisted entity?
DSO, if you look at for the unlisted entity, it will be in the range of around 95 to 100, because there are some contracts which is more of an engineering side of things which have a longer DSO. So that will be around 90 to 95.
I also just wanted to highlight here in the unlisted companies, more than 50% of the revenues between both the Pune and the Bangalore entities is coming from the group, and that's not at that 90 or 100. It's only the third which are at that 90.
Sure. Thank you. So then once we get listed, will this, even the business that's coming from group and as we see offshoring will increase, will this DSOs come down even in these unlisted entities and get converged to our listed entities numbers of DSO?
Yeah. So our target there is in the range of 65 to 70, and once the merger happens, and that's the same target that we will have for all the entities as well.
Okay. And can you give me the headcount number for December, sir? And how much were we planning in September for ending the year? Like for March, how much were we planning and where are we for March 23?
So for the listed company, we did not really, there was really not much of headcount increase in this quarter, that is the quarter ended December. Currently, the billable headcount is around 1,700 for the listed company, and we have close to 1,450, close to 1,500 for the unlisted companies. And the total headcount for the company is at around 3,850 in the roundabout. So we are expecting that as a company, we will be at around 4,000, close to around 4,000, excluding the contractors. And including the contractors, we will be at around 4,300.
Okay. And how do we see this to ramp up next year, FY24, for the group consolidated entities?
We will cross our target is to cross the 5,000 employee numbers for next year.
Okay. If I'm just seeing our net addition is 50 a month, and that would take so that you were saying is only for listed entity, would that be the thing? So,
yeah. As of now, the net addition is around 18 to 20 in the listed company alone, and overall, as all the three entities put together, is around 50 to 60. And we also have plans in 2023 to start the graduate hiring, which we reduced a little bit in 2022. So including the trainees, we will probably be in around 5,200 or so by the end of the 23-24 financial year.
Okay. And sir, the last group share of revenue, if you can say for 9 months for both listed and unlisted entities?
Listed entity, it's around 18%. And for the unlisted entity, overall, if you look at it for both Pune and Bangalore, it will be in the range of actually in Pune it is around 85% of the revenue comes from the group company, and in case of engineering it comes around 15 to 20% comes from the group companies.
Thank you. We have the next question from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, am I audible?
Yes, Rohit.
Yes. Hi, Balaji. Hi, Vishnu. Just wanted to understand, so Balaji, I think you mentioned that a large portion of the unlisted business is from the group. And I remember in the merger call that happened almost a year or so back, we had a very strong outlook on increasing the overall offshoring for the group itself. So, can you share a bit around that? How are we progressing there? And even I think the parent also had a very strong year and also expecting to have a strong year next year. So if you can share a bit around how does that, how is that strategy shaping up for us, and what can it lead to in terms of growth for the next 2-3 years? If you can maybe spell that out also.
Yeah. So, Rohit, we have not really changed any outlook on this particular piece. If you recollect what we talked about around a year back when we made the announcement, for the combined entity, that is the current listed and unlisted, when the merger happens, The overall revenue contribution from the group would be in the range of around 30 to 32%. And in 2 years' time, that is by 2025, that is March 2025, we expect that the group contribution of the revenue would be in the range of around 40 to 45%, and the direct revenue contribution would be the range of around 55 to 60%. And that has not really changed much. And if you look at even overall, if you look at the number for the listed company, while this can mention that it's at 18%, that was also primarily because the direct markets, particularly the inorganic growth that we had last year, increased the direct market shares, and that's why the group revenue is at 18%. Even though the total number has increased significantly, it's seen almost a 35 to 40% growth from what it was in the previous year. So we continue to be upbeat, and that's what the focus area is. So all of us are focused on, both Rajesh Krishnamurthy at the group level and Ralph. Everybody is pushing the best shoring or the offshoring, of course, not only for India, but overall as a contribution. And this year there is a renewed focus, even though, it will reduce the top line to some extent. The focus is on bottom line and to make sure that, we try and achieve our offshoring or best shoring targets. So there isn't really too much of a difference in terms of the strategy, just the rigor is getting more.
Right. And so, like in terms of, we've been around 95 crores in the unlisted entity. So just wanted to understand, how do you see this, given what you mentioned, how do you see this panning out, let's say 3-4 quarters out, or maybe a year or two out? Can we see whatever we are seeing, what you mentioned in terms of outlook, what we hear in terms of slowdown, etc. But notwithstanding that, can we sort of see quarter-on-quarter growth of about 4, 5, 6%? Is that possible, or do you think that we may have to sort of be more realistic and see how the external environment is? Just wanted to understand on this part, because this has, the unlisted portion has sort of gotten stuck at around 90-95 crores per quarter over the last 3 quarters. I know our listed entity had a fillip because of an acquisition, but just wanted to understand this part of how are you thinking?
So when we look at the numbers for the last at least 3-4 quarters, we look at it overall as one India, including the unlisted companies. And some part of the business have grown, some part of the business had some sluggishness. But overall, as a country, we still expect that year on year our growth will be in the range of 15 to 20%. Even after the merger as well. So after the merger, obviously, we're not going to look at whether it's unlisted, listed. It's going to be per se. And we still think that we will be able to grow that 15 to 20% range year on year. And there is enough potential in the market to do that as well. And including the best shoring, if we are able to make sure that we are able to grab more business from the group, it's going to only increase that particular contribution. So we are really not tapering down any of our ambitions that way. But in this quarter and next quarter, we may have to be a little more cautious, but an overall outlook for the next 3 years, we are not tapering down any of our ambitions.
Sure. And what would be the cash on the unlisted side, Jessica?
Sorry, I don't have that number of cash. I only have the cash balance of this. Maybe I can find it out to you.
Sure. But our overall cash balance is about 159 crores on the listed side, plus about 63 crores that you've given to our parent. Correct? Is that right?
Correct.
Sure. And while Balaji, you did talk a bit about our overall thought process around parking the cash there, but also, because of this merger, maybe we have not been able to finalize our dividend policy as such, but would really appreciate if you can probably post the merger, articulate how we are thinking as a group. that would be really, really helpful for us as shareholders.
Yeah, absolutely, Rohit, and that's certainly there on the cards. Like what I mentioned, we will take it up in, during our next board meeting for sure. Of course, I can't predict the outcome, but we'll certainly take it up.
Thank you. We have the next question on the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Hi, thanks for the opportunity, guys. So one question for Ralph. If I recall correctly, in the last call, you were expecting the group to grow at 20% in the current financial year, or the current calendar year, I should say. Given the comment you made about customer being cautious, has that changed at all?
No, this has
Ladies and gentlemen,
not changed. Because we have even seen the recent publication that we have, I think it was yesterday or the day before, about the performance of the group. We have confirmed that we were able to grow organically by 23% last year. We have even seen that we had good growth during the year, what is even helping us even to continue with our growth strategy in 2023. So the guidance that I've even given there for the group is what was even confirmed in the press release that we have communicated, and what we were able to achieve 2022. And as I said, we have good growth during the year, but it's even helping us now to continue even in 2023. And I think this will even then give additional and even more opportunities from a global perspective, so that we even then, and that is a key part of the strategy, even bringing more work to our different centers that we have. We know that India is in the heart of the strategy, in addition to the centers that we are having in Romania and Morocco and the region. But I can confirm the 20+% for the group.
Okay. So, Balaji, I'm wondering, your guidance for your revenue growth is 15 to 20%, and your share from group is supposed to be going up on a combined basis. Then doesn't that seem a little conservative? Or are you seeing something that we are not looking at, which is making you give this kind of guidance?
Yeah, we are, I wouldn't say conservative, Rajesh, because still last quarter, if you heard me, I kept saying 20% plus. This year, this thing 15 to 20%, primarily because of what, I'm not saying that it is going down, but what are the cautiousness we're seeing in the market? At least for this quarter, that is the 2020 Jan to March quarter, and the next quarter, we are just being a little cautious, but still our ambitions are in that 20% plus.
Okay, understood. And then, Desikan, on the cash that you're parking with the group, are you guys thinking of a limit to that? Or, if you can just give some color as to, I understand what you're saying, that if there's an M&A opportunity abroad, it will be easier for you to execute if the cash is sitting at the group level. But if, as you guys are thinking about the policies, if you can, decide that there is an upper limit to that, and if there is one, then if you can share that with us.
Generally, the way we look at it is we try to ensure that we have almost 2 to 2.5 times of the working capital to be kept in here. So anything above that, we see that we will be using it for the kind of the cash pool activity. So our costing has been like that. So that is the way we are putting the cap on that. So it will be around 2.5 times of the operating expenses what we have. We don't want to take it outside it. Maybe we will take it to 3 times of operating expenses, which goes on. Beyond that, we will do this leverage up, but anything going less than that, that will be the cap for us. Currently, that is the cap we are looking at, even though we are not given that much of loan, but maximum loan is something which we are looking at. And also, if you look at whatever the approval which we got from the shareholder, I don't think we will even exceed it for now, that amount.
Thank you. Participants are requested to kindly restrict your questions to 2 per participant. We have the next question on the line of Hiten Jain from Invesco. Please go ahead.
Yeah, thanks. My first question is that in this current
Mr.
environment...
Jain, your audio is not very clear. If you could come closer to the microphone, please.
Is it better now?
Yes.
Yeah. So in the current quarter and even the previous quarter and what you're seeing on ground, we're seeing some kind of cautiousness given macroeconomic challenges. I was just trying to understand that the offering of offshoring effectively it takes center stage in difficult times where clients want to save cost optimization deals kind of take center stage. So I was just wondering that why can't this environment be used to our favor and actually increase offshoring to the clients and where we can actually benefit. So what is the thought process on this, Balaji?
So the focus on offshoring has always been there. Obviously, it can't be a short-term solution that just because there is a requirement for cost optimization, people will start offshoring immediately because of that. It has to be a strategic decision because when they talk about offshoring, it's not something which is a reversible strategy. So and everybody have their own commitment as well. So, but we all have as a strategy, what the group has been progressing and what we have also been supporting is any new opportunity that we are running. By default, we look at what kind of offshoring can be done and where it can be done. And for any existing opportunities, it has to be a full-fledged transition phase and the acceptance of the customer. Because it's not that they can just ramp down in the local countries and move here because they all have their commitments locally as well. So it can't be a short-term strategy. It has to be something which has to be a long-term plan, and that's something which we are executing, and that's something which is showing in the results as well in terms of absolute numbers. Even though in the listed company the percentage doesn't show because we had a larger growth in the direct market. Ralph, do you want to add anything more?
Yeah, I think that is always from a group perspective that even the amount of delivery and the contribution is going up even quarter by quarter. On the other side, as we're even focusing a lot of even the go-to-market and sales activities really more on the transformation part of our customer portfolios and not only on the part that are just simply trying to achieve some short-term cost reductions. As you described, Balaji, we will certainly continue to do this. We are including but not only from a cost, especially even from a competency, skills, capability perspective, all the knowledge and expertise that we have in our delivery centers that we have in India and other places into our offering. And this is even where we even then see that we are increasing the contribution, especially from the teams from India, as we are bringing the expertise, the competency, and all the customer engagement, both new engagement and even existing engagement. But it's definitely not our short-term strategy. We have to look now at let's say, market consolidation and try to approach the market that's purely based on cost or on cost reduction. That we will see this as a very short-term approach, not supporting even the mid and long-term strategy of the company.
Okay, thank you.
Thank you. We have the next question from the line of Sugandhi Sood from InCred Asset Management. Please go ahead.
Yes, hi. Am I audible?
Ma'am, you're sounding very low on the call. If you could kindly come closer to the microphone.
Yes, hi. Thank you for taking my question. I'm sorry, I might have missed a little. I joined the call 10 minutes late, but my understanding is that your unlisted business has done 273 crores of revenue for the first 9 months. Is that correct?
Yes. For the 9 months period. Unaudited.
Sure. So, I just wanted to understand how is the direct business doing here, because if 20% is what you're doing from the parent, and if I just kind of apply the similar run rate for the next quarter as well, it's not a very strong growth compared to the the base year, and given that you have a significant exposure to strong growth markets, like even aero is picking up now, and autos. So I wanted to understand, and some of the other companies that we track with exposure to this sector have done pretty well. So firstly, how's the X group business performing?
In terms of I'm assuming that what you're asking for, because the 20% is only for the listed company, not for the unlisted companies. In the unlisted companies, the group's contribution is little over 50%. So in the listed company, the group's contribution went down from the 20% to 18%, primarily because the direct markets grew faster, and also added to that is the small acquisition that we did, because of which overall, even though the number was lower, the percentage is lower, the overall number is certainly much higher. And so it's not that the aero business or the engineering business is not growing. It is growing, but and most of the growth is actually coming in from the larger group's customers as well. And we still think that the 2023 is that is one business which will grow faster, like what you mentioned, primarily in the aero and defense and the space segment. We expect significant growth, and if you're tracking, we also participate in the aero show in India as well, and there is significant upbeat momentum on that particular business. Ralph, do you want to add anything more?
Yeah, even in addition, what we have seen in 2022 and what we even are projecting for 2023 is strongest growth industry was definitely in the aero and defense sector for us. Followed on all what we're doing in automotive, and in both areas it was around the embedded and electronics activities that have really even accelerated our growth, and this is even then followed by several other industries, including even then the banking, financial service, insurance market. So what we can really see at the group level, that the fastest growing segments in 2022, and this is even underpinning the planning for this year, or for this fiscal or calendar year for us from an Expleo perspective again, especially the aero segment and defense segment, where we have seen very strong demand, and where we even see that we are very well positioned. And I think even after the merger that we will see additional demand even then coming to India, especially from the segment.
Sure. And just to understand, I'm trying to reconcile again, the guidance that you give as a group, and also the clear, strategy of increasing offshoring to the India business, in compared to the, guidance that for growth that you have as a group. So, with both the drivers inching up in terms of our contribution to growth and the group guidance being strong itself, I'm unable to reconcile the 20% growth guidance that you have. Is that the conservatism for the next 2 quarters? I mean, is that do we have to wait for 1 or 2 quarters, before we can reconcile those two? Or is it like you're building that same picture for the entire year?
What we meant as 20% growth is for the entire One India as an organization. And if I look at where we were to where we are as a combined entity, that is the merged entity, we will still be in the range of around 18 to 20% from last year. even though the listed company has grown by close to the 37% to 40% range in the last 1 year. And I had mentioned this even earlier as well. So, when the numbers were small, when we were in the 200 crores and 270 crores and 280 crores, revenue numbers, what we talk about as 40%, this is not the same when you are actually at 500 crores plus. That's the reason why we kept talking about how do we, in percentage terms, it can't be the same, but in real terms, it would still be in the range of 100 to 120 crores year on year. So that's what I meant when for the 20% range.
Yeah, I think that's one of even the guidance and that we have given at a group level. Even looking at the press release from yesterday, so we're able to do 1.27 billion in revenue in 2022. We are aiming to cross the 1.5 billion euro mark in 2023. That would mean that we are heading again in the close of roughly 250 million. That is the amount that we have been able to achieve in 2022. The big percentage-wise, it would come slightly down, rather even taking this into consideration as we see that we are shifting more work, probably even then into our delivery centers, what could then be even a little bit of softer revenue contribution from these activities, but even helping us to protect and probably even to increase the profitability of the company. But when you look at the absolute figures, 250 million net growth in 2022 is even from a group perspective what we are even aiming for in 2023.
Thank you. We have the next question on the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So, sir, a key rationale of any investor investing with Expleo Solutions India is the strong parent that is there. It's almost like a $1.5 billion revenue group now. So you feel that we in the Indian subsidiary could also demonstrate a very large scale in 4 to 5 years. Simply just building upon the learnings of the parent and being ambitious enough and getting a lot of business from the parent once the merger is through. So are we thinking the right way on that rationale, or is it a bit of too much of extrapolation? That's one. And secondly, sir, on a previous con call, you were on record saying that by 2025 calendar year we would be reaching 10,000 employees. So is that still on, or that will be deferred by a year or so?
Okay, so if you were to track the ambitious plan, of course we are ambitious, and that's what actually you would see in the numbers as well in the last 3 years. It's moved from the 280 crores to 500 plus crores as of December. If you look at the calendar year of December. And, that ambitious plans have not tapered down, and it's in line with what the group wants to achieve as well in terms of the growth plans overall as a company. And as a combined entity, since we are tracking it as a combined entity, even though we are not a combined entity as yet, India is actually 100 million plus, will be 100 million plus when we actually combine the numbers as of March 31st, 2023. And your question, the second question on the 10,000 number, we still have the ambition of getting to a 10,000 number, and once the combined entity starts selling some of these services in the direct markets and with the focus on the group business coming into India, we still have the ambition of getting to the 10,000 by December 2025. Ralph?
And so how soon you feel that, we could be having this, $5 million contract or, one contract of, more than $10 million that, do you feel that once the merger proceedings are gone through, there could be more business flowing from the parent? Because finally there is this, shortage of manpower in Europe and even Eastern Europe countries.
So, not sure as to the shortage of manpower piece, because the unemployment rates are once again going up. So I'm not sure about the shortage of manpower. We have our skill gaps in India as well. So I don't want to get down to that discussing about the manpower situation, but scale and size, India is the one which can actually deliver the scale and size. We still have some supply side challenges in India, but hopefully 2023, should get the better of it. That's what our expectation is. And as far as your question on 10 million plus contracts, if you look at what we had shared in our investor deck as well, so the number of customers where we have more than 1 million, the number of customers where we have more than 5 million has significantly increased over the last 3 years. And once the group business comes in, the group where we are not going to have customers of 10 million and 5 million or 20 million, because the larger contracts will be signed by the group, and we will only be an execution partner there. And, that way, if I look at group as a customer, we are already having group as a customer, and overall, across India, the group alone is contributing to close to 25 million in terms of our, or close to 30% of our revenues as well. So I don't think, that larger contract which the group will sign will certainly have a benefit for us in India as well. Ralph, do you want to add anything more?
Yeah, totally. And I think we're definitely not looking at it from, let's say, employment or capacity restrictions in Europe. We see really India, and especially India, really with all the strength to scale and to accelerate. So we're not coming from probably a more negative observation and understanding that something is limited. We really see with India that we can scale and that we can accelerate. But even by maintaining even all the skills, the expertise that we even have in the European markets, and I think the combination is giving us quite a good opportunity even then to do this. When we leverage both the competency that we have, especially our existing and with the opportunities that we have to scale the business in, especially in India. When it comes to the size of the customer, yes, the group portfolio where we have large corporates, where we are doing even not only 10 or 20 million in revenue. I think there are customers in the portfolio where we're doing 10, 15 or 20 times of the revenue on what you have mentioned or even asked us. And when you even then have probably even the customer in this range, let's say 100 million plus, 200 million plus, I think it is even then more likely that when we accelerate and include even India even more into the service delivery, that we even then see that the share of the revenues from these customers will even then be in the range that we have mentioned.
Thank you. We have the next question from the line of Jagdishwar Topo from Japa Investment Advisors. Please go ahead.
Good afternoon, sir. I was going to the press release of the group statement where our group CEO had made a few statements, guiding for the 2023 number, and he sounds very bullish, and the statement is bullish. Says 1.5 billion euro revenues, 20% growth, and also it adds that there will be addition of 7,800 workforce for the next few years. So from that point of view, our CEO is sounding a bit cautious. So there is a dichotomy there, but you have explained, quite a bit there. So my specific question would be, how much of that 7,800 will come in India? I mean, how much will be added in India? If you can answer a very specific number. You would have done all the calculation bottom-up approach. So, how much would be added in India as a whole, all the three entities?
Okay, so I'll probably try and answer the question in two parts. One is, I'm not trying to get to the 7,800 and, how much of that 7,800 is going to come to us. Our objective is to try and look at both from a direct market, how much people we will need, and how much of the business from the group which we are going to get. So with that in mind, we had set a target of saying that we will probably be in the range of around 5,500 by end of 2023, calendar year 2023, and we'll get to close to 10,000 by calendar year 2025 end. So the 2023 or the end of 2023 number of 5,500, we may be closer to that, but may not really hit that. It will be in the range of around 5,000 to 5,200 is what we expect. However, we are still not scaling down our ambition of getting to a 10,000 headcount by 2025. And this 2025 headcount could be both organic and inorganic. And we still hope that we should be able to get to that 10,000 headcount by 2025. And if you were to look at the number that Rajesh has talked about in the group's result and how much of that would come to India. As of now, if you look at all the best shoring which the group does, more than 50% or close to 60% of all the best shoring what the group does, or even in some cases it's even more than that, is actually coming to India. So I don't want to put a number there, but that's the kind of share of best shoring that India is getting right now. Ralph, you are closer to the statement, so if you want to add anything more.
Yeah, as you said, let's not comment only then on some of the numbers. I think what we see, and then certainly even one of the objectives for 2023 is that we see that India will become the country with the largest number of employees in the group. I think most of you know this French group. They are always the largest country in terms of employees was France. And I think we will even then change this so that India will even then be the country with the highest number of employees in our portfolio. And I think we will probably even see this going forward. And I think this will be, with all what we said before, will even then be accelerated. The 1.5 million assets, I think, the group is not listed. I don't want to see this as market guidance, but that's definitely what we want to achieve, and where we even believe that we are on a good track, as we even don't want to communicate figures that we then later on are not able to achieve. But it's the guidance that we're having good growth during the year. We have higher capacity for net growth of 250 million last year, so we are confident even to achieve to do this again in 2023. And that is, I think, as always, an increase in headcount. What we need, we even see, even due to some of the inflation that are in some of the European countries, even an increase in food prices. And overall, as a combination of all of this, we even see that we are. That's why we have even communicated a 1.5 billion, and why we are confident to achieve.
Okay. Fair enough. My second question is very quick one. Your US business is now almost 14% of the total revenue, and which is quite reassuring. So, what's the target you have for next few years? How much of a US business would contribute to your overall revenue? I mean, ballpark number would be quite helpful. And what did you do to to break that ceiling? US has been very tough for you. I mean, it was a remarkable achievement. So, I mean, if you can elaborate a bit on that one.
I think we've talked about the US and what we wanted to do. So at this particular point of time, we still continue to be focusing on US more from the listed entity perspective rather than as an organization as a whole. And the strategy for US is going to be determined based on when the group is going to make a more aggressive push in US, which would probably be end of 2023 or early 2024, when the group could actually make a significant acquisition in that market, which will drive the growth for all the entities put together, including the listed entity as well. Till then, it's going to be more of what, we could do with an additional 5 million, 10 million here or there. The US growth in 2022 also is primarily driven based on the smaller acquisition that we did, and also having more salespeople there. Now we have 2 dedicated salespeople in the US focusing on the particular market from the second half of last year. So that's what is actually helping us in growing. But still, at this particular point of time, it's more focus based on what the listed company is doing. That's what the push is, not at the group level. And the group level push will come, hopefully by end of 2023 or early 2024.
Thank you.
Mike, I think we are overshot the time. It's a really all.
Sure, sir. Would that be the last question then?
Yeah.
Sure, sir. You can over to you, sir, for the closing comments.
Okay. Thanks so much. I didn't even realize that we had actually overshot the time. Interesting questions, and really appreciate the level of interest and on what we are doing and how we are doing. Thanks so much for joining the call, and hope you continue to show interest in the company and its focus. Nothing more to add from my side. Thank you. Take care.
Thank you.
Thank you.
On behalf of Expleo Solutions Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thanks.
Thank you. Bye-bye.